Well, hi. So behind me is the world famous Super Tubes surfing spot in Jeffreys Bay, South Africa, and I'm going to show you a picture of it shortly. This is a place I grew up surfing in the 80s and the 90s, and it's world famous. Got one of the best breaks in the whole world, and I'm staying here for the weekend, well, just for a few days. So I thought I'd just tell you a little bit about what's going on in the market in this video. So I've got some trades on. I'm going to show you exactly what I've got on and how I'm going to trade them. I've made about 2% last week, so I'm starting to recover some of that loss that I incurred on the pound when the pound collapsed. And I'll be back to break even in terms of that trade pretty soon, and then we'll be off again. So I'm going to show you which positions I'm in, where I got in and where I'm going to get out, and how I'm going to trade them. So watch the rest of this video to find out all about that. I'm going to show you some pictures quickly before we go into that of Jeffreys Bay and point out where these spots are and where I used to jam these breaks and ride these trends or waves right to the end. And it reminds me a little bit of the Ed Seykota song about riding that trend right to the end, and that's what surfing's all about, a little bit. And if you can get onto a good trend, try and ride it and trade it as far as possible, and make sure you squeeze at least 60 to 70% of that trend into your bank account, and that's what it's all about. So when you get a good trade, stick in it as far as you can and manage your position using trailing stops, or adding to a winning position is even another good way to trade that a lot of people don't know about. But I'll talk a little bit about how I'm planning to do that in this video, so keep an eye on it. And in the meantime, I'm just going to point out some of these spots for you, so that for you keen surfers, you'll know where I grew up surfing, where I was jamming here with the grommets in the 80s. As a 18, 19, 20-year-old, and when I was at university studying mathematics and science, I used to spend quite a lot of time here, sometimes a little bit too much. So I'll just show you a picture of the surf spots, point them out to you for those of you who do like surfing, and for those of you who don't really have much interest in surfing, it doesn't really matter, because I think you'll find it interesting anyway. Then stay tuned to the rest of this video to watch the trades that I've got in. I'll show you on the charts, and I'll speak to you shortly. So up there is what's called Super Tubes, and it's right in front of us. I'm standing in front of the break. This is a fast wave with a long ride all the way down this way. Steep walls, some tube sections, a couple of barrel sections along the way. Good for experienced surfers, good for competitions. It's very famous, Super Tubes. We're staying right in front of it at the moment in the guest house that we've got just behind me. Now if you go past Super Tubes, a little bit further, sometimes when the surf's big, you can ride Super Tubes all the way down there into the distance, which is where you'll find the point, and then eventually the Kabeljou River mouth. And that's all the way down there. So on a really big day, on a good day with the right sort of formation, the right swell direction, and the right sorts of waves, you can ride all the way down from that point, all down here, through this section here, which I'll tell you about shortly, down to the bottom break, which is called the point, which tends to be where the grommets and the youngsters surf. And in fact, right now, today, they've got a competition on for young surfers, 14 to 15 years old. It's an international competition, and they're busy surfing down there in the distance. All right, so we're back at the charts, and I told you I was going to be looking at 4 instruments, really: the euro, gold, NASDAQ, and Bitcoin. So let's start off by looking at the euro. Now, what we had last week was a rally, which was an important one through this previous support level at around about parity, or just below parity, around 0.99, and we actually just touched parity precisely. But the important thing is we broke up through that resistance level, which was prior support, and that's at around 0.99. If I move that line down to there, you can see what happened. And on that day, we closed with a strong bullish candle above the 20-day moving average, but below the trend line, but significantly above that previous support level, which is now, well, had become a resistance level. But in the preceding, or the following days, rather, we collapsed back down after touching parity, and I think it was to the point, to the pip, at 0.9999, I think it was, or perhaps even just at 1, and we collapsed back down in the following 3 days. So that was Wednesday, Thursday, Friday, falling back to where we are now. I was actually buying the euro at some of these support levels. I bought some over here and a little bit at near the bottom, and was hoping that we would bounce off those levels. We didn't. And after actually having moved into quite a good profit, I eventually ended up closing those trades at break even. So I missed out on a little bit of intraday profit, but protected the overall position. The only reason why I was looking to actually buy the euro was simply because we had a strong daily close above previous support, which then became resistance. But I didn't expect that move down strongly from parity, not even having reached the downward trend line on the daily chart. So we're back down at the 61.8% Fibonacci retracement of this move up. And, well, it's looking pretty weak again, I have to say. So should we be looking to buy the euro into dips? Is 0.95 thereabouts, this low, is that the bottom? 0.9535? Or are we heading lower on the euro? And all wisdom would say, yes, we probably are heading lower. And any pops should be sold. So that's the strategy I'm going to be taking. However, having said that, I will be looking for opportunities on a very, very clear reversal pattern to take some intraday longs, perhaps after a clear hourly reversal pattern and off one of these key levels. And those key levels are the 61.8% fib, which is the low that we reached. Well, we didn't quite get there, but very close to that low at around, 0.9720. Then we've got the 78.6% fib at 96.35, and then we've got 95.35, the recent low. So any of those levels might offer intraday bounces or pops or bear market rallies, I suppose you might call them. And if we have a look at the hourly chart, we can have a look at that in a little bit more detail. So there we are. That's how we closed on Friday. This is the hourly chart. You can see there were opportunities to buy. That's where I was buying. We rallied up to there, and I thought, well, we've got a chance of actually moving up through this resistance at around 0.98. But we failed at this 20-hour moving average and fell back down again. So that line below here, that's the 61.8% fib, and that's at 0.9713. And then we've got the 78.6% fib at 96.35. And then we've got this low, multi-year low at 95.35. So those are the key levels. I really don't know what's going to happen to the euro. I would like to think that there should be some strength shown. We're probably due for at least a medium-term bear market rally in the euro. But having said that, and that would take us up to about maybe 1.1 to 1.0350, 1.1350 rather, and then perhaps a little higher. But we've got all sorts of problems that I'm not going to go into detail about now, but they include obviously Ukraine, they include interest rates, they include general turmoil in bonds and derivatives in the UK, bank interventions, all kinds of things happening, pension funds almost going margin called, belly up all over, certainly in the UK and other parts of Europe as well. So it's not looking too good for the euro or the pound. I'm not trading the pound at the moment, so I'm not going to discuss that today. But the same sort of principle applies to the pound. The problem is we've got massive intraday moves, massive daily moves on the pound because of what's been going on. And that's really difficult to trade unless you trade with very tiny positions. So, and for most retail traders, that's not likely. Now, let's have a look at Bitcoin. This is an interesting one, like really interesting. This current price, my broker, this broker, Black Bull, doesn't trade Bitcoin during the weekends. So that'll open in a few hours' time at around midnight, my time. But we've got this pattern on Bitcoin, and I'll tell you how I'm trading it. So I've told you how I'm trading the euro, just to go back to there. So I'm looking for any intraday pops, perhaps little rallies, but generally I'll be looking to sell the euro into rallies. And if you have a look at my previous video, you can see how I'd use that 20-day moving average and the 20-hour moving average as a strategy. Go and have a look at that. It's really quite helpful in these sorts of markets, and I think you'll find that there are opportunities to trade any of these instruments using that strategy. It's in the last video that I put up. Now, let's have a look at Bitcoin. This is the day chart for Bitcoin. What's interesting about Bitcoin, like super interesting, is that with all the ups and downs we've had, all the collapsing in various markets in the pound, massive strength in the dollar index, and some volatility in the dollar index at the top. We've had general dollar strength, general volatility. We've had weakness in NASDAQ, reaching new lows yet again this year. And yet Bitcoin has stayed really solid. And this is the last instrument I thought would actually demonstrate such firmness and solidity, and one might call it sanity. And my theory and my feeling is, and we'll talk about gold shortly, that gold and Bitcoin are kind of being viewed as, dare I say it, assets to own during these difficult market times. Now, if you have a look at this chart, you can see we're forming a U-shaped smiley bottom on Bitcoin. And I've decided to buy at this level here, on the curve. And I've got two strategies with Bitcoin. I'm looking to buy on any dips to this curve. As this curve moves higher, I'm hoping that the lows on Bitcoin, this is a daily chart, remember, that these daily lows will start to improve and then we'll get higher lows. Actually, Friday's close was a little disappointing because we got a lower high and a lower low. This has since bounced up here over the weekend. It's not reflecting on this chart, but we're at about 196 now at the moment. So, and this chart's showing 195, 195.30 actually. So we've bounced up a little bit over the weekend from here, and I'm hoping that this low will hold. It's a pity that the daily low is and the daily high on Friday were a lower low and a lower high. But we are holding above this curve. Now, this is not a technical chartist's curve. It's just something I've drawn in here for fun. But it's an interesting curve. And what's also interesting, as I mentioned earlier, is that Bitcoin has been holding firm, showing less volatility, less weakness, more strength, more solidity, and more consistency than almost everything else apart from gold, which I'll talk about shortly. My strategy, to buy as long as we are above this general curve that I've drawn in here, stops below these lows. So the lowest point here is at 18,180, thereabouts, which is a new yearly low, a new low since the highs, actually, but and lower than this previous low that we experienced in July. But I'm hoping that this dip is actually a bullish sign and that we'll hold above these lows and move higher. So my first strategy with shorter term trading and with a larger position is to buy at this level right now, with my stops below this low at around 18,200 or so. But I've also got a longer term position, and I'm willing to hold that position. I've changed my mind on Bitcoin. You'll have seen one of my videos before that I thought Bitcoin was going to show extreme weakness. As it turns out, I appear to have been wrong. And Bitcoin has shown relative strength. And if you're an experienced trader, you'll know that when markets are difficult to trade, buy into strength, buy into those things that show strength, whether you're trading stocks or currencies or anything else. Look for those that are showing strength when everything else is showing weakness, and that's a good signal to get into it. So I like the shape of this, a big move down, a low, a bounce off that low, a new low, and then this holding strength above it in this smiley curve formation. My long-term position, I was a bit busy telling you, is I think we could drop down to around about 14 or 13,000. So I've got another position on Bitcoin, which I'm going to hold into those levels if we should happen to get there. And that's 13 or 14,000, where I'll be buying a little bit more and adding to that position. So I'm prepared for that. That's a long-term position, a very small portion of my overall strategy, but it's there. And that's the idea on the longer-term position. So buying now with the idea and hope that it might rally. I'm talking about the long-term position, and then also willing to add into 13, 14, 15,000, somewhere around there. For the short-term position, which is a much bigger position, with very tight stops below this current low, I'm looking for a bounce off here, a move up to test these highs at around 23, 24, 25,000. And then I'm looking for the next move higher up into the 30,000s. And ideally, we'd get up to about 32, 33, or even 35,000. So somewhere around here, where my cursor is where I'm hoping for this move. Now, I've got a very, very good risk-reward ratio on this trade because my stops are just below here. Very small move from there to there. But my target is way up here. And if you look at that in terms of the overall longer-term picture, it makes a lot of sense. In fact, we could move all the way up into some of these levels in quite quick time. If you have a look at some of these rallies, they don't take long. Same with the dips. If you have a look at some of the dips, they don't take long either. So when the market starts to move one way or the other, you can see it can happen in a matter of days or weeks even. So with a bit of luck, we'll get a decent pop-up here on Bitcoin. We'll make some money on this short-term position, which has tight stops and a decent-sized position. Failing that, my long-term idea on Bitcoin is that it could move down and we could test 13, 14, 15,000. And if you have a look at your longer-term charts on Bitcoin, I'm not going to show you that now because this video has got to be truncated, but you'll see that those are the next support levels below around about where we are at the moment. Having said all of that, this area right now, where we are at the moment, around about 20,000, 18,000, 19,000, 20,000, it's a super, super key area. And if we're going to get some dramatic moves higher, it's going to be from this level. Otherwise, it could be a lot lower at 13, 14, 15,000. So that's Bitcoin. Dollar yen, okay, I've got a position on this actually. Again, this is a very tiny position. My idea on dollar yen, we've had the highest daily close in 20 or 30 years or something like that at 145.37 on Friday. That is the highest daily close we've had in more than 2 decades. We saw some Bank of Japan intervention a few days ago, a couple of weeks ago over here on this day here. This was the 22nd of September. We hit that 146 level and there was some intervention that took place which really involved selling dollar yen rather, buying yen, and a move down into 140. So that was about a 500 pip drop, which took place in an hour or two. I think these interventions are going to continue to take place. So I've got a position on here, a very small position, with stops above 150, which is miles above us. But I've got about a 1-to-1 risk-reward ratio on this position. If we do get some more intervention, we should drop back down to around about 140, this level here. Perhaps even down as low as this here, which is 139, this previous high. So I'm expecting perhaps, in a few hours' time, in fact, when the Asian market opens from now, that would be about, about 12 hours from now, as I'm making this video. That's any time from the start of the Asian market going into the European market tomorrow. Last time this happened was at the opening of the European market, opening of the London session. It could happen in the same way, which should be about 20 hours from now. So I'm just hoping for a quick move down there and in and out of that position. So I've got a 500 pip stop on it. It's going to sound ridiculous to you. I've got a 500 pip stop, but I've got a 500 pip profit target. And so it's a 1-to-1 risk reward. Very small position. My risk is not more than 1%. Actually, it's about 1.5%. So you can figure out what your position size should be for a 500 pip stop loss for a 1.5% risk. But if it moves down, I'll make 1.5%. So I'm risking 1.5 to make 1.5. That's the kind of idea. And I think that's a pretty good bet that they will intervene. So that's my position on dollar yen. Pretty simple, really. Just hoping that the Japanese will get involved sooner rather than later. Right, gold. Now, this one's the most interesting one to me, and this is where I'm most invested. Actually, gold and NASDAQ. I'll tell you about NASDAQ after gold. Gold, we've had a fantastic move higher. This is looking really bullish to me. I mentioned earlier at the start of this video that people are probably sick and tired of getting chopped up and destroyed, or at least badly hurt in the currency markets in general, with dollar yen interventions by the Bank of Japan, the pound collapsing a week ago actually, and all sorts of problems with the pound, euro wavering around levels, sort of stair-stepping lower, not making any concerted effort to rally. Really difficult to trade all of them. I've been trading for over 20 years, and this is a particularly difficult period to be trading. But gold and Bitcoin, we've talked about Bitcoin already, but gold is showing some really good strength. And along with the dollar and Bitcoin, gold is the only one, that's the only other thing that's showing any decent opportunities when we're talking about these. I'm not talking about other things like bonds and derivatives and all that sort of thing. I'm talking about fairly standard sort of instruments. So gold, what's interesting is we had this massive 1 week long rally, or a week and a bit really, all the way from this low. We formed a new low, which is really good news. So we know where the bottom is now. It's at 1620. So we moved down through this very key level at 1685. We collapsed through there. This all took place actually straight after the pound problems and more dollar strength, and NASDAQ and S&P collapsing. We saw gold moving down in sympathy with all of that. But we've bounced up since then, and we massively rallied through this previous support. It's an incredibly key level, 1685. And if I go back, just move this line down a wee bit. I've just drawn this line in higher now because that's the top we formed. So that level there, and if you go back and have a look at your weekly charts, 1685 is super, super important. That was that level that everyone was hoping to hold above in order to see a resumption of the bull trend on gold. We collapsed below it. But we formed a beautiful new low in the process, a spike low, a false break beneath, and now we're testing that 1685 level from above. I'm really excited about this. I think this is a great trade. I'm looking to buy. I'm already long on gold from, actually, interestingly, I got the almost the lowest tick on gold at 1690. I had my order in, or thereabouts, I think 1691. I always put it about 1 point above, so 1690 was where I wanted to buy, so I got in at 91, so about $1 higher than the low. And let's just go to the hour chart. So I got in right there. We bounced up a bit. I thought we were heading up, but we didn't manage to maintain that rally. But I think we could come back down and test 1685 again. There's that line. That also happens to be the 38% Fibonacci level of this move up from the low. So that's beautiful. We've got a confluence of that very, very key long-term resistance and support level now, and the 38% Fibonacci. We've also got some levels below here, 1672. I'm hoping that we don't get below this red line, below that key level, but we could just see a test of 1672, 1660, which is the 61.8% Fib, and perhaps even, and I hope not, 1640. But I think we'll at least try in the short term to hold above 1685. That's my trade of the week coming up. Long gold, 1685. I'm long from 1690, but I've got more orders in to buy at 1685, and I've got a little bit to buy in at 1675, which is around this level here, the 50% retracement. Now, for a good strong move like this that we saw, if you get a 50% retracement of that move, that's pretty healthy. Anything that, if you start to move below 50%, becomes less certain, but a 50% retracement and a bounce off there would be a really healthy sign for a resumption of this trend. And what we'd want then thereafter is a close again above 1685. That's my trade of the week coming up. I like it very much. So we've got Bitcoin I'm focusing on, and gold. Euro, I'm going to be looking to sell rallies on a signal short, bigger positions, and dabble and dibble into buying little dips, smaller positions, until we see some evidence that the euro is going to move above parity and hold above there my overall view on euro is short. So it's short euro, long Bitcoin, long gold. Let's have a look at NASDAQ. Well, this is an interesting one. So last week we formed yet a new low at 10,820. We've come back down here, down to 11,000. 11,000 is a pretty key level, as you can see, going back here. That was the previous low before we dipped down. Could that be a false break below this low? Possibly. I think I think that the NASDAQ, S&P, Dow, etc. are very bearish. I'm very worried that these will move lower. However, having said that, we are due for perhaps a bear market rally, a rip your face off rally, as they might say, like we've had from time to time over there and over here, and we might be due for yet another one. If we can hold above 11,000, which is this low, the previous low in June, up until this little break below, we could see a very strong, powerful move up, back up to 12,000, and maybe even up to 12,800, which is the next key level above here. So if I just copy this line, you can see with the NASDAQ levels, I'm going to tell you how I'm going to trade this shortly. So there we've got, well, let's call it 12,200 really. And then we've got the next one above there, over here. And that's the really key level, 12,800. So can we get a rally through here? Can we get a bounce off here? I don't know. I think it's a risky trade, but I'm trying it anyway. I've got a very tight stop loss on this trade. If I have a look at the hourly chart, I'll just show you. Let's just quickly get that up. So close on Friday, we saw a little spike low on the hourly chart. That looks pretty good. And I'm looking for a move back up to this 20-hour moving average, up to that red line, which is at 11,500 over there. And then up to 12,200 and then 12,800. So that's my strategy. I'm hoping that this break here below 11,000 was a false break and that we'll see a new bottom here. As I said, this is a risky trade. I've got a tight stop loss. I'm not willing to risk more than a little bit. My stop loss is at 10,940 and I'm in at 11,000. Actually, I'm in at 11,020. So very tight stop loss, potential big upside up to about these red lines. We'll see what happens. That little bit there below 11,000, is that going to be a false break below, or are we going to see another big move down in the week to come? So that's my strategy. Really pretty simple, but I think pretty elegant. Very low risk, long position on NASDAQ, a pretty solid position on gold. I'm hoping that we'll hold above 1685. It's not without risk, of course, nothing is. And Bitcoin, I've got a short-term position, quite a decent one for a move up off this curve, but I've also got a longer-term position with the idea that we could drop down into 13, 14, 15,000. Euro just dibbling and dabbling on hourly, sort of daily intraday swing trading, nothing serious. And dollar yen, as I told you, I've got a very small position, hoping for a 1% gain if we drop 500 pips or a 1% loss if we rally 500 pips. I think this is probably a pretty good trade on dollar yen. I don't think we're going to rally 500 pips, but I think we could easily drop 500 pips. So that's pretty simple as well. So that's my strategy. That's it. And I hope you enjoyed the little bit of surfing at the beginning of the video and pictures of JPY. And so let's jam these trades. Let's hope for a really good week and try and ride these trends. If we do get big pops on Bitcoin, on gold, on NASDAQ, and a big drop on dollar yen, they'll be big and they'll be powerful. And don't get out for 20 or 30 pips. See if you can get something decent. Ride that wave, ride that trend. Jam that thing right to the end, jam down the line, as they say in surfing, and have a great trading week ahead of you. Good luck, and I wish that for myself and everyone else who's trading in these markets in these really tricky times.